The global packaging industry's momentous growth on the back of online shopping in recent years appears to be losing momentum, according to FTSE 100 company DS Smith's latest results. The London-listed firm has suffered from weak paper prices and worse than expected volumes over the last 6 months. Shares in DS Smith fell as much as 4.6% this morning, as management admitted they had faced a difficult economic environment this year. Read more. Packaging maker DS Smith's shares on the rise as profits soar. The figure's pre-tax profit grew 31% in the 6 months to the end of October, to £213 million, as revenue climbed 3.9% to £3.2 billion. However, operating profit came in 3% lower than analyst expectations at £351 million, and like-for-like revenue fell 5%. DS Smith declared an interim dividend of 5.4 pence a share, up 4% year-on-year. Shares recovered to 2.6% down, at 368.2p. Why it's interesting: Smith has made a number of acquisitions in recent months, which it admitted was the principal driver of its robust profit and revenue growth. But investors have not missed the fact that organic volume growth for its corrugated boxes is below forecasts, and pricing is under pressure. Russ Mould, investment director at A.J. Bell, said, "The company argues it has achieved a better performance than the wider market, but even if this is the case, it is hardly a reason for investors to get excited." The growth of e-commerce, which requires boxes to send goods out to consumers, saw market sentiment towards packaging companies reach fairly elevated levels for a while, but today's update from DS Smith adds to signs that the growth story is losing momentum. David O'Brien, analyst at Goodbody, added, while DS Smith's broad European footprint and exposure to consumer demand has been resilient, this is offset by weakness in industrial end markets. Read more. DS Smith sells plastics division to U.S. private equity firm. What DS Smith said. Chief Executive Miles Roberts said, "Our leadership in e-commerce and sustainable packaging solutions has enabled us to perform well despite a difficult macro environment and volatility in paper pricing. The continued growth in margin and strong pricing discipline has been particularly pleasing as we deepen our relationships with fast-moving consumer goods customers and grow market share." For more on this story, visit the news article link.